Man, Elon Musk didn't tweet anything for 9 days. I don't know. Where is he? He's back? Where was he? He took his 4 kids to see the Pope? I still think Disneyland would be a safer option. What are the key market levels? How to use them in your everyday trading in order to be profitable, how to mark correctly the key market levels, and are they enough to be relied on solely in your everyday trading? Those are all the topics that we're going to be covering today, so stay tuned. Hello everyone, my name is Dan. Welcome to another lesson of Ultimate Beginner's Guide for day traders, where I'm covering everything from zero to hero in order for you to become a profitable day trader. So what are the key market levels? Key market levels are areas within the price where there's a lot of movements and a lot of orders. It is a psychological area where retail traders, institution market makers place their trade and try to identify and predict, will the price stay in the same level, go above it, go below it, will the trend change, etc. Key market levels are broadly used by day traders, and they are one of the basic tools in technical analysis that help you identify good and correct trades. So now we'll be moving on to the PC, and I will be showing you how to mark key market levels correctly and which time frames do you use. I would recommend using 1 day, 4 hours, 1 hour for marking your key market levels, because they are the most reliable time frames. Everything below that, yes, you can find some strong key market levels, but they're usually going to be a short-term key market levels, and they're not gonna last long, and you will be replacing them very quickly, and eventually your screen will be looking like a spider's web. You will have 300 levels marked, and you'll be confused, and you'll not know where to look, and you will not know which level is actually the correct one, which level works and which level doesn't. So to start, we'll be marking key market levels at a 1 hour time frame, 4 hour time frame, and 1 day time frame. So let's move on to the PC, and I'll show you one example of key market levels. Okay, so this is a example of key market level marked with a blue line. What does the key market level consists of? It consists of level creation candle and confirmation candles. The logic behind it is you have a level creation candle, okay, the candle that created the level, right? Like this one right here. This is the candle that created the level upon market opening, all right? And then you have these confirmation candles that confirm the level correctly. And how do you know that the level actually works? Well, you need to have at least 2 or 3 confirmation candles from the creation candle in order to see that your level actually works. And another very important thing is that those confirmation candles, they need to be touching the level exactly on the dot. There can be a few points of arbitrage or a few points of difference up or down. However, preferably you want them to touch the level exactly at the specific price. So that's how you will know that the level actually is there, it still works, and it's still relevant. As we can see, we had a candle here that created the level, all right? This is the candle. Then we had a confirmation candle here that touched the level exactly. It just went maybe 1 or 2 points above. These here, they were the false breaks, okay? So they didn't touch the level, so we're not gonna count them. This candle right here touched the level exactly. Then you had this candle right here, and then you had this candle right here. This candle right here was like a couple of points as well below, so that's why we don't count it as a confirmation candle. These right here, these 3, they touched the level up to 1 point or 2 points difference. So almost precisely, surgically, exactly at that level. And this is what you want to see. This is what you want to see at the reaction of that level, that you know that level is still relevant. Here, as we saw, we broke the level, we went above it, okay? We stayed above the level for a while, then we went back under the level. So we had these 2 breaking points, okay, and it was as I spoke in the last video, it was a false break. So we didn't manage to stay above, we came back down, and now we are just touching the level and coming back up and down, up and down. So now what is the importance of key market levels? They can guide you, they can tell you where the price reacts the most. Okay, they can literally be your guidance on where you should take a long trade, where you should take a short trade. So how do you use key market levels? Once you mark them, as I've already explained in the previous video, from the key market levels, two most basic trades that you can trade, which I'm trading, are true break or false break. True break is when the price breaks that level that was significant in the past, basically the level that couldn't be broken in the past. Now the price managed to break it and it didn't reverse right away. Okay, this is very important. So the price broke the level, stayed above it, and continued going upwards. That is a true break. When we have that, that means that you're good to go and place your trades on the long side, meaning on the buying side, okay? If the price comes back, as we spoken here, right over here, and goes below the level again, that is a false break. That means that here, this impulse wasn't strong enough and it was a false break and we ended going below the level again. So as I've mentioned in the previous video, what we could have traded is when the price came back to this level, we would have waited for it to reverse and go back above the level, and this level would be acting as a support, but it didn't. You see how big red candles we had over here, and there was a strong impulse going down and the price just continued plummeting, and here we just touched it but we couldn't break it and we just continued going down. So we would wait in this area, and when we see that we didn't manage to break back above the level, we would take a short position, and that's how we would profit off of it. So every single next time when the price reaches that level, we would be placing a short position because we just had a confirmed false break. The price didn't manage to stay and hold above the level, and you would be just benefiting off of those movement and plays from the level. So when would you consider trading again on long side or buying side? Well, you would consider buying again if the price reaches this level and does not go down again but stays above, the same like it did over here in this area, right? So you want it to go up, stay above it, and look how strong impulse we had. So this could be easily again a true break, and you would be entering a buying position on this if this scenario happens again. However, if this repeats where the price comes here to the level just to bounce off back again, you would be shorting or short selling off of this level again. So just from this one level that you mark, there are endless possibilities and there's multiple trades, and this is what day traders do. We sit and wait in an ambush and wait for the opportunity to arise and to show itself. We do not chase anything. The biggest problem people have are chasing trades, over trading, because they see something that it's not there. They see some trades that are not there. So let's get back to the PC to show you. For example, here, what I would trade here, I wouldn't trade anything because I don't see any clarity. The price didn't break above the level, okay? So I don't know if we're gonna continue going upwards, and the price didn't have any strong impulse for sell-off. I mean, I don't have any reason to sell because you see we're in a climbing position. So what I'm gonna do, I'm gonna wait for the price to come retest the level again, and then let it tell me if it's gonna bounce down or it's gonna go up and break it. Why would I take this trade over here in the middle of nothing where I don't see anything? I don't see any opportunities. Yes, there are different techniques that you could take a trade based on this area right here, like previous highs, previous lows, etc. But you want to minimize your risks as much as possible. You want to take as safe trades as possible. You don't want to rush into anything, because rushing into something will mean that you're only going to lose money. This is proven statistically, and that's why 90% traders lose money, because they're chasing things. They see things that are not there. They don't have a proper strategy. They don't follow their own rules. They actually don't have any kind of rules to follow, and that's why they lose money. So in order to be profitable, you will need to make your strategy. You need to make your own algorithm. You need to keep trading statistics. You need to back test your strategy. What I want you to do is I want you to go onto the chart, any product that you want to trade, and try to identify a key market level. Okay, so go back onto the chart, identify a key market level, mark it by using these rules. that you will have a LCC, level creation candle, a CC confirmation candle, and once you have like 2-3 confirmation candles, mark the level, and C, back test it, see how the price reacted to that level, and try to find some false breaks, try to find some true breaks, and see how many points it moved to the upside from the level, how many points it moved to the downside from the level, etc. This will give you a further guidance into, do they work? Do you know how to mark them correctly? Are they actually a good strategy or not? Is this something that interests you, or you want to use a magic indicator and make tons of money, watch TikTok videos on people who post like 65 trading indicators from TradingView, combine them together to give you some BS strategy that doesn't work? Just go out there, test it yourself, see if it works, see if it doesn't work, and let me know down in the comments below. So now we come to a question: do the key market levels work on their own? Well, the answer to that would be definitely no. You need more tools to combine in order to make key market levels profitable for you, and in order for them to work proper and correct way. One of the ways is by adding a depth of market or order book to your broker. Basically, order book is a book of trades placed by other traders that are waiting to be filled. So we talked in the previous lesson about limit orders. So the order book will show you limit orders that are placed into certain areas of the price by other traders. So based on the order book, you can see if there is pressure for selling or buying in the key market level that you are trading. However, also the order book can be manipulated. There can be some fake orders placed on the levels just to confuse people. And that's why nothing is guaranteed in trading. Nothing comes as 100%. So even if you use key market levels come together with the order book, you can still be tricked. You need more tools. You need some indicators that will show you the price action, how strong is the trend. And when you combine all those things together, then you have a higher chance of your trade to be successful. So even if you use 25 indicators or 25 different tools, that doesn't guarantee you success. It will not help you generate something 100%. There's no such thing in trading. In trading, we are just relying on our strategy and the probability in that moment that the price action will go our way. Once the price does not go our way, that's when the risk and money management kicks in to stop the bad trades. So that's how you become profitable in the long run. You're waiting to place trades based on your strategy, based on your algorithm, and if the probability is on your side and you make some money, amazing. If the probability is not on your side, you want to cut your losses as fast as possible, okay? You don't want to overstay in a trade where you're not welcome and lose so much money. It will happen to you. You will overstay because that's how human nature works. And we are greedy by nature. We're just greedy creature. We want more and more money, more fame, more whatever you want of it, more, right? You will get stopped out. You will lose a lot of money, and that's how you will learn. So you need to use your proper risk and money management together with your strategy, like key market levels, in order to be profitable in the long run. If the trade goes to your way, awesome, you want to leave it running. There's a saying, let your winners run, but that is actually easier said than done. I've did it myself many times. You are scared. It's just human psychology. You get scared. Oh my God, okay, I made this money now. I need to get it. I need to keep it. I cannot lose it. If I lose this money now and I took this trade, it just went to my direction. I just cannot lose this money. You panic. You start seeing things, because you are not confident. You are not confident into your trading skills. And once you get to the level when you are confident enough into your trading skills and your trading system, you will just look at the chart, you will place a trade, wait for it to be executed or not, and that's it. You will let it run. As easy as that. And the trade will either hit profit or loss. You will log that trade and that's it. And after a while, you will take the data that you compiled and you will analyze it and see if your strategy actually works or it doesn't work. So to sum it up, Using key market levels can be a very powerful tool to help you in your trading and making money long term, and you should be using it only with a strict specific type of rules that I already gave you in this video, and you should not be solely relying upon them. In the next video, I will cover indicator trading, what you can combine with the key market levels in order to make your success rate higher and improve your chances in the financial markets. We will be discussing many more topics in the videos to come, so stay tuned, and I hope you enjoyed this video, found it very useful, informative. And if you did, please make sure to hit that like button, subscribe to the channel, click that notification bell to get notified whenever a new video comes out. And that's it for today. Thank you so much for watching and have a great day.